Hey everyone, and welcome back to my channel where we discuss everything related to investing. In the world of investing, there are legends who leave an indelible mark on the industry. Stanley Druckenmiller is one such known character. Stanley Druckenmiller, often referred to as one of the greatest macro hedge fund managers of all time, has had a remarkable career spanning over 4 decades. Over the past 30 years, Druckenmiller achieved an astonishing average compounded annual growth rate of 30%. Notably, he has never had a negative year in his investment career. Recently, Stanley Druckenmiller sat down for an exclusive interview to share his latest insights and perspectives on the economy and stock market. Let's dive into some key highlights from the conversation. In the interview, Druckenmiller provided his latest views on the economy and the stock market. When asked about his perspective on a deep recession, Druckenmiller expressed that, in his 45 years in the industry of economic forecasting, he finds this period to be the most challenging. He has less confidence in any predictions compared to previous times. Typically, when asset bubbles burst, the economy follows suit. Looking back over the past 500 years, whenever interest rates have fallen below 2%, we have experienced a bubble, and the future economy has not fared well. The current bubble has lasted for 10 years, making it the largest bubble he has studied. The continuous practice of giving away money for free is clearly not the only foolish thing happening. Druckenmiller pointed out that Bed Bath & Beyond has gone bankrupt, and it is expected that more regional banks will face problems. These banks have tied 43% of their loans to commercial real estate. Our way of life has undergone significant changes, and future vacancy rates will likely be higher than in 2008. Druckenmiller also mentioned observing the currently inverted yield curve of government bonds, which indicates to him that we will likely experience a deep recession in the third and fourth quarters of this year. He also provided a definition for a deep recession, stating that corporate profits must decline by more than 20% and the unemployment rate must exceed 5%. Based on his company's understanding, Druckenmiller stated that real estate and the hospitality industry are relatively resilient, but freight and retail are already performing very poorly. He emphasized the importance for institutions and individuals to hold cash. He personally holds some gold and silver, and believes that copper has potential due to its tight supply. The widespread adoption of electric vehicles will greatly boost demand for copper. In the future, as we enter a major recession, governments worldwide will provide infrastructure investment, which will benefit copper prices. However, Druckenmiller's current position in copper is not significant because the depth of the upcoming recession is uncertain. He also mentioned that Nvidia and Microsoft are making AI investments, with a particularly bullish view on Nvidia. Even if a deep recession occurs, he believes Nvidia may have difficulty declining as it has become essential. Of course, he acknowledged the possibility of being wrong, but he expects more opportunities to arise during a recession. Investing in AI at that time could be similar to investing in the internet in 2002. Regarding the long-term outlook for the U.S. economy, Druckenmiller is rather pessimistic. He believes that the U.S. fiscal situation is worsening. Ideally, during prosperous years, one would hope for government profitability to compensate for previous losses. However, since 2008, this deficit has only grown larger. Last year, government spending reached 7.7% of GDP, while France is 2.4%. To bridge this gap, either tax rates must be raised to 40% or government expenses must be cut by 35%. Currently, 40% of our taxes are spent on the elderly, and in 20 years, this will likely increase to 60%. Ideally, money should be invested in the younger generation, as they represent the future hope. Some predictions indicate that by 2040, our tax revenue will be unable to cover the promised expenditures. Either US government reduce various retirement benefits and subsidies now or reduce even more in the future. Ironically, President of France, Macron, has already started doing this, but the problem of America is 3 times as large. Druckenmiller also acknowledges that throughout American history, there have been a few instances where the country has awakened and changed its behavior. He hopes that the United States can overcome this difficult period in the same way. After reading this interview, I realized Warren Buffett's recent shareholder meeting speech had similar points of view. Warren Buffett stated that he expects most companies to have lower profits this year compared to the previous year. It is a rare pessimistic sentiment from the legendary investor, who is typically optimistic about the United States. Both of these legendary investors have issued pessimistic signals one after another, which is indeed worth our attention. They are not optimistic about this year, so we should at least increase our risk control for this year. In the long run, I agree with Druckenmiller's view that if there is no recession to allow the entire economy to cleanse itself, it will be difficult for us to experience the one-sided market trend of the past decade. Investing will become more challenging, but at the same time, I believe it will become more interesting. In fact, for the long-term investors, I don't think it will have much impact because regardless of the state of the economy, our method of analyzing companies remains unchanged. Truly good companies will still thrive through bull and bear markets. It's just that finding these good companies will become more difficult. If you have other opinions, let's comment below. Please help to like and subscribe.